The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
We have a 70% consumer spending economy, and we have a healthy middle class drawing real pay gains. That's going to help keep this economy moving forward.
Wow.
Oh, wow.
Wow.
This guy, Bernstein, really grinds me. I mean, there's no bigger liar than him. He's unbelievable. Welcome to Phil's Gang. I don't like calling somebody a liar. That's pretty rough. But this guy, he deserves it. The lies he comes out with, he's the right-hand person to, he's Biden's, what's his title? He's the Chief Economic Advisor. He wouldn't know an economic advisor if he tripped over one. He's just a born liar. Example, listen to what he's saying. This is unbelievable. You gotta be brain dead to believe this guy.
We have a 70% consumer spending economy, and we have a healthy middle class drawing real pay gains. That's going to help keep this economy moving forward.
The middle class? Are you kidding? The middle class is screwed. What's he talking about? This is amazing what he's saying. The real wealth of the middle class have dropped $33,000 this year alone because of inflation. God. I mean, we have proof that we're experiencing right now the worst economic downturn since the recession of 2008 to 2009. You remember, our entire economic growth is based on debt. Debt. Our country has grown on debt. Our steel industry, our car industry, the pizza shop down the street, it's always debt. Borrow, debt. That's how we grow. Unbelievable. But when you have a White House and this dope who is setting monetary policies that's creating massive debt, massive deficits, because they won't stop spending more money than they're taking in. They just won't do it because they don't care. They have their wealth. I was thinking the other day, I was in Publix, and the kids are in there working, and they're fumbling around, and they pay them minimum wage, and they keep them at minimum wage. Like, and know what their attitude is? Their attitude is, that's all they're worth. That's all they're worth? No. You create that worth. You don't train them. I mean, it's amazing. They don't train these kids. They don't train them. They don't know what they're doing, these kids. It just drives me nuts. So think about this. We've created huge debt and deficits. Not we, the White House. And that has caused massive inflation. It's their policies. It's their policies that caused massive inflation. Starting out with the COVID rescue plan, the Inflation Reduction Act, the Omnibus Bill, and the Green Energy Bill, and the Ukraine Bill. We have no money. We have a negative net worth, our country. But again, debt and deficits. followed always by massive inflation, destroying our middle class. Their income dropped $33,000 in 1 year when you adjust for inflation. And when you have debt and deficits, and followed by terrible inflation, which occurs, because you got to pay for those deficits. You got to print money, pay for it. We don't have any money. So that inflation pops up. And in turn, the consumer and the investor, they lose confidence when there's inflation. They go to the gas pump. When they lose confidence, then what happens? There's a bigger demand for short-term bonds. So when an investor, even a consumer, when they look at the inflation and they're being squeezed, what do? They don't want to loan money to the government on a 10-year bond. What are you, nuts? They'll go buy a 3-month bond. Now, that's caused by a bad monetary policy. And when people get fear, they feel uncomfortable. They no longer believe in the economy. They buy short-term bonds. Why, if you are a president or this idiot Bernstein that tells the president what to do when it comes to the economy, why would you ever let that occur? Why would you ever put people in a position where they have fear, where they're going to go and buy more short-term bonds than long-term bonds? Because that creates an inverted yield curve. And when you create an inverted yield curve, you're screwed. Because an inverted yield curve signals higher interest rates, as we call them, yields. You hear how the 10-year Treasury hit 5%. That's going to be nothing. We're going to go higher than 5%. So, to let an inverted yield curve occur is just stupidity. Not stupidity, I'll take that back. They don't care. Because the more inflation, the more wealth they create for themselves. Inverted yield curves, look what it did. It signals higher interest rates, because now you got interest rate, you got inflation, you got to raise rates to fight the inflation. So inverted yield curve, first thing you think, oh my God, interest rates are going up, my car payment's going up, my student loan payment's going up. No wonder people get scared and they buy 3-month treasuries and they dump stocks. So the inverted yield curve signals you're going to pay higher rates. And guess what? It also signals banks aren't stable. Because as yields or interest rates go up, they start losing money on the mortgages they have, on the investments they have, bonds. Case in point, Silicon Valley Bank, First Republic, Signature Bank, $50 billion unrealized license. How did that happen? Think about that. How on earth did Bernstein sit there at a meeting knowing they're raising rates, knowing that Silicon Valley Bank, First Republic, Signature Bank, and 180 other banks are going to be losing money as they're raising rates to fight inflation? That the banks, like these 3 banks and 180 other regional banks, were getting an income of 2.5% on their mortgages and on their bonds, and interest rates go up to 4%, losing money. Did anybody think about that? Of course, but they didn't care. They didn't care. Just like the kid in Publix, the CEO of the company, he doesn't care. Why would he care? He's getting, 100 times what the poor kid at Publix is getting paid, sweeping the floor. Think he cares? It's unbelievable. And everybody says, oh, the market's going to do terrific. We're going higher. Really? What are you, nuts?
What
So welcome back to Phil's Gang. Now, if my gang members, you're listening to me, remember what we did. I told you to purchase the bank stocks, that the bank stocks were going to lead this rally. And guess what? The bank stocks are leading. But remember, they're not investments. They're swing trades. They're not going to hold. Because when you look at our Pro 2, still red, still downtrend. And when you look at Goldman Sachs, I just sent out an alert to my gang to take some profits in our Goldman Sachs. That we bought that the other day. Let me put it up here. Where is it? My Goldman Sachs here. And we had, where can I see it? Okay, I don't know where it went here. Okay, right here. Yeah, Goldman Sachs. No, okay, I'll just pop it in here, but some reason why it's not there. Okay, so Goldman Sachs. If you look at Goldman Sachs, if you're watching on my site, see how it's going up nicely in the last 3 days? But look at the volume. The volume is decelerating. So as your stock goes up and your volume goes down, take profits. Take profits, okay? We did the other banks that we have. Yeah, I don't know where they went. Okay, Citi. Okay, same thing. The volume's going down. The last 3 days, the Citi's going up. The volume's going down. So take profits, set in your stop. Bank of America. Bank of America, same thing. If you look over the last, say, 10 days, we got more sellers than buyers. So this isn't going to last. And then we got USB. Okay, same thing. I mean, it's just there's not enough volume here to hold these. So this is all short covering, and that's fine. I told my members when we went after these, I said, and I've been telling how many times I told you in the last month, I said, we're going to have one last rally before this market crashes. And I told my members, let's go along the banks. They're going to lead it. And let's go along, the tech stocks are going to lead it. The typical tech stocks, our NVIDIA is going to go up, or Microsoft is going up right now. I told them that's what was going to lead it, and it's doing it. Just exactly what we said happened is happening. Microsoft's going up. Apple just broke through the 200-day moving average. So again, but look at Apple. Look at the volume. The volume is going down as Apple's going up. So to manage them, gang, okay, manage them, take some profits when you see your volume diminishing and your stock going up, okay? All right, and your tech stocks, as I said, be very, very careful with those because yields are still very, very high. Even though the 10-year came down 4.7, it's still insane, okay? All right. So again, let's put everything in perspective. Our entire economy, our entire economic growth has always been based on debt, borrowing from the banks. And you got to make sure you got a good White House, a good monetary policy, so they're not creating debt and deficits, that they're creating productivity. But that's not what they're doing. They're creating debt and deficits, spending more than they're taking. They're not creating productivity. Just trying to create another bubble. So this is massive inflation. So our consumer, our investor, loses confidence. What happens? They start buying 3-month treasuries instead of 10-year treasuries. That's an inverted yield curve. When you have an inverted yield curve, what happens then? People get fearful. They get fearful. They know something's going on. And look what happened. Silicon Valley Bank, First Republic, and Signature started to tank because the yield curve was inverted. And so all the banks are losing money. And the only way they're holding the banks up, the regional banks, by pumping $2 trillion into them. And what they're doing with the big banks, the 5 biggest banks, City and the rest of them, they're making sure that they have enough money that they can, any of their clients come in or customers come in, they want to get cashed out, they got enough cash. But this thing about Bidenomics, building an economy from the middle out and the bottom up and the down through the top and the top back up and around back up over their shoulder and down again. What the hell's he talking about? More lies. This guy, his own BLS, Bernstein's own BLS, saying that 72% of the 14,000 jobs, he keeps saying, this is what he's saying about these million jobs. He keeps lying. Listen.
You've got 14 million jobs since this president got here.
He didn't, his own BLS says that's not true. 72% of the 14,000 jobs he's talking about were already recovered when Biden showed up first day in office. He only created 3 million. Those weren't new jobs. People went back to work. Also, he says how the middle class is so strong.
We have a 70% consumer spending economy, and we have a healthy middle class.
Wait a minute. Yes, we need consumers. They contribute 70% of our growth when they consume, but we need the middle class leading, and the middle class is not strong. He's lying. His own BLS would tell him, and they did tell him, the average real wealth of the middle class household has fallen $33,000 in this year. I mean, just give me a break. And when looking at today's economy compared to pre-pandemic levels, employment is up only 3.7 million. Yet, when you go back to the pandemic, under Trump, we had 6.7 million. That's 3 million more jobs than this guy got. Come on. This is insane. This is all lies. Unbelievable. That's why, again, use charts. If you were with us, you'd be making money in the banks right now.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. God, it is amazing how people are going to get sucked in. They just get across the board here, just said across TV. 10-year Treasury yield tumbling. Tumbling? Okay, the 10-year Treasury yield was at 4.9, now it's 4.7. So now all the banks are going up, right? And that's why I told my members going into this, that they're into this rate hike, not rate hike, but to the meeting, I said they're going to rally this market. So they're going to use the banks to do it. And exactly what's going on, but you got to look at your banks. While we're on the while we're in the break, I told my members take Goldman Sachs. I sent them an alert, and I said, look at the volume. Your stock's going up. That's fine. Put a stop in. Take some profits because the volume's going down. If you take a look at J.P. Morgan, if you go back and take a look at the last 10 days, we got more sellers than we got buyers. But that's okay. We'll still be long. But remember, swing trades are different than a position trade. Position, we're in for a long time. Swing trade, we're in for a short period of time. And then Goldman Sachs, okay, again, same thing. Goldman Sachs, the volume's going down. Each day, Goldman Sachs going up, the volume's going lower and lower. But that's okay, as long as you got to stop and take some profits, I told them. UBS, okay. UBS, nah, that's not doing much anyways. And then Wells Fargo, there you go. Wells Fargo's going up. Now, these are all swing trades. And if you go back and look at the last 10 days, we got more sellers than we got buyers. So you got to take a look at this stuff, okay? Don't get caught up in this, okay? And by God, don't be buying these banks as investments. You're going to get killed. Microsoft. There's a great example of you want to get screwed if you don't know what you're doing. Look at Microsoft. Go back 1, 2, 3, 4, 5, 6, 7 days. We got so many more sellers than we got buyers. Incredible. So what you do is the sale is it goes up. Make sure you put your stop in. When you add to your position, don't add a lot, and then. If we get another good day, take some more profits, put your stop in, okay? Because look, we got far more people want to sell than buy it. But going back to understand where we are, and most people don't know where we are, that the fact is that the middle class that he's talking about doing so well, he's lying. They're not doing well, not at all. And the fact is that wages aren't keeping up with the inflation for the middle class. And we need them. They're the ones that drive growth. The middle class drives growth. And they're falling behind. 72% of the middle class income families say their earnings are falling behind the cost of living. Are you kidding me? That's up 68% more than a year ago. But Bernstein, look what he says about it. Listen to how he lies about it.
We have a 70% consumer spending economy, and we have a healthy middle class drawing real pay
Healthy
gains.
middle class drawing great wages? Are you kidding? 72% of the middle income family says their earnings are falling behind the cost of living. 72%. That's up more than 68% from a year ago. And also September made this 12th straight month of slowing wage growth. And also September, we saw the 13th straight month of declines in wage growth. So September, we're talking about the middle class here. September, we made the 12th straight month of slowing wage growth. October, we saw the 13th straight month of decline in wage growth. Look, we need Americans to consume, to grow the economy. We know that. They contribute 70% towards our economic growth. We know that. But you need the middle class leading, and the middle class is screwed. There's no more important contributor than the middle class, more so than the rich. And the middle class, historically, have always represented the country's overall economic health. It always has. We always depended on the middle class. Middle class, that's where the small businesses come from. It's where the entrepreneurs come from. They are the biggest contributor to our economic growth. They drive investment, small businesses, but no more. They're screwed. Between GW, Baby Bush administration, the Obama-Biden administration, and now the Biden goofball administration, Harris, who looks like a back end of a jackass, the middle class, okay, the share of household income under these three gangsters, okay, have declined from 62% to 42%. What are you, nuts? But nobody's going to tell you the truth. The average real wealth of the U.S. middle class, the household, has fallen, as I said, more than $33,000 this year alone. And since the Fed started raising interest rates, the middle class has lost more than $2 trillion in wealth. And listen to Bernstein to Bernstein.
We have a 70% consumer spending economy, and we have a healthy middle class.
You think you're a healthy middle class when they lost $2 trillion in wealth? This guy is incredible. What are you, nuts? Bernstein, again, another lie. 14,000 new jobs. No, he didn't create 14,000 new jobs. He created 3,000. That's it. And then he says, boy, we created 800,000 new manufacturing jobs. So what? They're not getting paid anything, and most of them are part-time jobs. Who cares? You got manufacturing output has dropped 43% on an annual rate, and hours worked fell at 38%. Who cares? You got 800 people working. They're crap jobs, mostly part-time. This is unbelievable. In fact, the household survey, which is the one I always look at, that's the part of jobs that report the data that looks directly at the American worker. They put all the fluff out. It showed that 440,000 more Americans became unemployed. And that tells us they've been lying about, boy, do we have a strong labor market. How do you have a strong labor market when 440,000 Americans just became unemployed? Are you kidding? Why? Because of this raging inflation. We also had the Dallas Fed, Philly Fed, New York Fed, who oversees the manufacturing, all declining. This guy just lies. And manufacturers cut employment because workloads are insufficient to warrant additional hiring. And that was, remember, in September. And now in October, manufacturing again. Jobs contracted. Jobs contracted. So this is crazy. So again, if you're getting excited about this rally, you had to be in these stocks with us before this rally started. And I told every member, you can ask any of my members, a week ago, 2 weeks ago, I said they're going to create a rally going into the earnings season, and they're going to drive the bank stocks. So let's buy the bank stocks, but not as investments, because on my Pro 2 color-coded chart, those are position trades. Those are stocks we hold on for months and months and months. Solid red, warning us there's not enough institution buying. But it's okay to buy for 3, maybe 2-3 days, and that's on our Pro 1 chart. Look, we can help you. You help yourself, okay? Just help yourself. Learn how to sell short, how to execute.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Out philsgang.com or give us a call 877-600-4264. Now here's Phil.
And welcome back to Phil's Gang. Look, we have a lot of overhang in this market. This market's broken. It's not going to be fixed overnight. Remember, this market took 13 years to screw up. 13 years. They did financial engineering. 13 years. They paid $22 trillion to push rates to zero instead of using productivity, instead of producing goods, instead of business investment. They didn't use business investment. This was all fake. A lot of people made a lot of money, created tremendous inflation that killed the middle class. Killed the middle class. The poor, as they call them, they're doing okay because they're getting all kinds of handouts. Handouts. Not the middle class. We need the middle class. The middle class creates small businesses, and small businesses are the cornerstone of our nation. I'm talking about that. Again, I was over at Publix. It's a supermarket. And I get disgusted. The kids they have are good kids. Train them. All my companies, boy, we trained our kids. We trained them up so they could get better. They could do better. Even if they left our company, went to another company and did better, we were proud. We helped them. That's the way it used to be. No more. And I love to hear the politicians. We're here to help the poor. We're here to help the underdog. Then why the hell is minimum wage still at 7.25? What are you, nuts? 7.25? We're here to help them. No, they're not. And even the Democrats, even the demos, right? We're here to help them. Really? You controlled all three branches of government 2009 to 2011. In 2009 to 2011, the minimum wage was 7.25. You didn't change it. Now, McDonald's, they said, well, we're going to take care of our people, $9 an hour. Well, the CEO is making $20 million. I get a kick out of that. Do you really think these CEOs are worth $20 million? No, see, it's the system. I know. I was a CEO of a public company. It's amazing. I was embarrassed what I was making. I'm being serious. I wasn't worth the money that they're paying me. I built the company. Unbelievable. It's the system. So, again, if you want to make money in the stock market, constantly, it's got to be consistently. It's a steady drip that counts. And you're a person who says, I don't have time to learn. I don't have time to learn. Don't tell me that. We have so many members that do just our SPIDER program. That's it. SPY is the symbol. They don't do anything else. And we have such support for them. Every day they know exactly what to do. Like today, we told them, don't you dare, even though the SPIDERs are going to, don't you dare buy them. Don't you dare buy them. Our color-coded chart's red. It's telling us we don't have enough volume. It's telling us the stock market's going to come back down. And we told them, we'll tell you when to buy the SPIDERs. And every new member, we tell them, just buy one share of the SPIDERs. Not to make money, just get your toe wet. Be in. Psychologically, we want you in the SPIDERs. Much different than your paper. This paper trading is nuts. Everybody makes money on paper trading. But when you get in there and you got real money, it's a difference. And just buy one share. We call it the Scout. It's like a bookmark so they don't forget. We do that with a lot of stocks. Right now, I have them watching. We did terrific shorting Hershey. Our color-coded chart, if you can see it here, our color-coded chart went from yellow to red. In other words, when our color-coded chart will tell you like it was green, and now all of a sudden the money's going to come out, and the stock's going to go down, it'll turn yellow. First, it gives you a warning, heads up. Isn't that cool? It gives you a warning, heads up, it's yellow. And then we get ready to short it. Anyways, we shorted it from around 260 down to today's around 187. So that's 28% return. Now, I'm not saying every gang member made 28%. I don't know. Some gang members don't even listen to what I tell them. They go off the reservation. I don't even know why they join. So, but if you listen to us, you'd be up anywhere between 10 and 28%. But now the money's going to be made in this stock going the other way. Because everybody who shorted it, who made that stock come down, what'd you say, 28%? When that stock dropped 28%, the people who shorted it, like us, we haven't made a dime yet. Because you have to buy the stock to get paid. You got to buy it. Because when we said we're going to sell it short at 260, all we do is we borrow the stock. We borrow from somebody who thinks it's going to go up. And I said, no, I think it's going to go down. Can I borrow your stock? So we get a broker, and he finds someone that we can borrow the stock. And so he thinks it's going to go up. Oh, yeah, here, sure, I'll let you have my stock. You can borrow it. And then when it goes down and we're making money, we got to buy the stock. And so when you think it went down enough and you're up enough, now you buy it back. And then what happens? The tourists come running in. They don't realize it's just the people who shorted are now buying it. So the tourists start coming in. And also, bam, the stock goes up. So we're going to make a lot of money on the upside of that stock. Another one we did well with, which one was it? The airlines. God. The airlines we did really well. Delta, Southwest, we shorted the hell out of those. Boeing, we did great with Boeing. That we did well with, shorting. Now those are going to make a lot of money for us because we're going to catch those on the way up. The other thing we're going to make a lot of money with, we're going to short cover, is the bond market, TLT. They've been killing the bonds. Everybody's been shorting the bonds. Now the dollar is going to drop. Okay? You just got to be patient. The dollar's going to drop. And then when that dollar drops, everybody's going to go in, all the shorts who sold the bond, they got to buy it. So there's a great opportunity in shorting because you get it on the way down and you get it on the way back up. There's nothing. I know people go into a 401k because they think, oh, 401k, they match me. Look at that, I'm going to be rich. They match me. As a former CEO of a public company, I can tell you, they don't really match you. They really don't. Because the hidden fees kill you. The hidden fees kill you. There's about 32 hidden fees. By the time you retire, you're going to look, wait, where'd my money go? So, this market right now has so much overhang. So many sellers in this market. And the bond market, it went from 4.9 down to 4.7, and the Dow's up 224 points. Like everybody, oh, this is it. We're on our way now. Now, I told you this was going to happen, and I'm looking forward to one last rally before the market crashes. We did the same thing with Enron. Same thing with Enron. Same thing. We had to catch that last rally. This is what we want. Now, remember, October is the worst month. We just came out of that month. The Dow, the spiders are down 14%. The Nasdaq's down about 21%. The Dow is down about 12%. So you're going to get a short covering rally. Once you get that 10%, they always start taking profits. That's why I told my members. I said, come on, we'll go in and we'll start buying what's going to rally. Tech and banks. So, but it's not going to last. Not going to last. We need this one last rally, then everybody's going to panic, and then the market, you need this one big crash so that we can finally, after 13, 14 years, we finally can get these stocks back to where they should be priced. Clean these, they're overpriced. They're overpriced. Look, join my gang, philsgang.com. Try it for 10 days. It's free. And I'll see you on the chart.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's